Okay, so good evening. My name is Claribel Martinez. I am a business consultant here at the Entrepreneur Assistance Center and also work as an accountant. Today's webinar is about understanding financial statements, and we're going to be speaking specifically about three financial statements. If you have any questions or anything you don't understand, just you can ask it here or raise your hands. Thank you. So let's get started. This is today's class is understanding financial statements. Uh, so the first thing I wanted to talk about what are financial statements, right? So basically, financial statements, they're written records that convey your business activities and the performance of your company. So anybody can pull up the financial statement and get an idea about where your business is financially. Okay, so the financial statements, they reflect your company's accounting and it shows its economic structure. Your financial statements show the economic activities that are carried out in a company during a certain period. So yeah, if anybody were to ask you for last year's, it's usually a certain period of time that you'll say usually last year or last quarter or last month, you'll pull up any statement depending on the information that you're looking for. You will pull up a different report, which some of them have different information depending what you need. Okay. Your financial statements are often audited by government agencies, accountants, firms, etc. So to ensure accuracy for tax, financing, or investing purposes. So also you want to make sure that you're staying compliant and things like that. So you always want to make sure that your financial statement are correct. Any questions? So I know that for a lot of business owners, they might just rely on whatever the accountant, but it's important for you guys to understand exactly what you're looking at. And if not, ask questions. That's what your accountant is there for. Why are they important? They're very important because any stakeholder that, or like if you want to get funding or whatever, the first thing they're going to do is want to look at your statements and your financials and see and make sure that the numbers make sense, right? And want to see how healthy the company is doing. So no, usually they financial statements, they provide a snapshot of your corporation's financial health. They provide information about your company's revenues, expenses, how profitable you are, and any debts that you may have. All this you'll see on your financial statements. So um, any company can see if you have a lot of debt or if you have a lot of expenses, how good is your income. They can also look for trends. If they look like at the past 3 years financial statements, they can see a trend of where your income and expenses are going, and based on those trends, they can make guesses for the future, right? They can make educated guesses on where your company is headed for the future years, right? Also helps you to track investments, okay, and see, right, if your company is making money or are you losing money. So also you can use it for budgeting and financial planning. Okay. These are your three basic financial statements that we're going to be covering today. We're going to be speaking about your balance sheet, your income statement, and your statement of cash flow. And each of these, they convey different information, but they also tie in together. Okay. Okay, so we'll start out with your balance sheet. Balance sheet is very important. If you would pull out a balance sheet to show assets and liabilities of your company. So basically, it provides information on assets, liabilities, and equity, and your stockholders' equity. This information on your balance sheet is used to assess your company's risk and future cash flows. It is used as assess your company's liquidity, solvency, and financial flexibility. This is your basic accounting equations, which is basically what you will see when you pull up your balance sheet. Okay. Your balance sheet has three categories. One is assets, one is liabilities, and one is stockholders' equity. And we're going to go into each one of them individually and explain what each of them mean. And then I'm going to show you a like sample balance sheet so you can see kind of what it looks like. So your assets are things that your company owns, right? Right? Anything you own that the company owns is an asset, right? Cars, right? Buildings, computers, etc. All those things are assets, right? So they're basically things that your company owns that have value. So not only that your company owns it, but it has value. So this mean, what does it mean that it has value? It means that it can either be sold by the company, or the company will use it to make the products that they will sell, right? That they will sell. So that's the type of value that you have, either for selling it immediately or for being used in the company. So assets include physical property, such as plants, trucks, equipment, inventory. It also includes things that can't be touched, but nevertheless exist and have value, such as trademarks, patents. Those are all assets because they are things that have value that your company owns, right? Cash itself is an asset. So are investments that your company owns in other companies. So if your company has stock or owns stock or any type of investments for other companies, those also are assets, right? So anything your company owns that has value is an asset. Normally you will see assets when you pull up your financial statement, the assets will be listed in order of liquidity, which means how fast can you turn it to cash. So obviously the very first on the top is going to be your cash account, right? And because that's already cash. And then it will be like inventory, accounts receivable, those things in order, right? So you're going to have two categories, which is current assets. Current assets means that you expect it to turn into cash this year. And uncurrent assets means that you don't expect to turn into cash in the near future or ever, because you're not selling it right now, or you're just not selling it at all. Okay, does that make sense? Any questions on assets? Yes.
I have a question. So how is the trademark a part of your assets?
Okay, so you own a trademark, right?
Right.
You own a trademark that has value, right?
Okay.
That has value for your company. So that's an asset because your company owns it and it has value.
So in case you want to sell it, you mean?
You can't sell your trademark or
Right, so I'm confused.
Like let's say your land, right? You can either sell it or it's used in your business, right? So either you have assets to sell or to be used in your business. Like example, you're building in your land, your business owns it, but it's not for sale, it's just where you conduct your business, right? So it adds value to your business because it's being used by your business to sell the product, right? Even though you're not selling it, it still adds value to your product because it's your patent that you own, right? Your patent is patented, right? So it adds value to your product that you're selling.
Okay.
Mm-hmm. So even though you don't sell it, it's still an asset. It still has value.
Okay.
So, for example, that would mean like if she could use her trademark to put it on like paraphernalia, and then she sells the paraphernalia. Is that like an example of how she can use that to make money for her business?
Yes, similar to how you would use like your machinery to make her paraphernalia, right? You're not selling the machine, but the machine is helping you make it, right?
Gotcha.
And also the trademark also helping you protect your product, right, from other people copying it, right?
Yes. Okay, great. Thank you so much.
Okay, you're welcome. Oh, somebody write something? Oh, thanks. Okay. So that's the very first portion you're gonna see. You're gonna see your assets in order of liquidity. So it means how fast are you planning on turning it to cash. So that's the first category. Your second category is liabilities, and liabilities are any basically is debt. Basically, in the simplest term, is debt. Liabilities is any debt that your company has.
So on that previous slide on assets, like there was something called like AR. Was that stand for?
Oh, that's accounts receivable.
Oh, okay. Sorry, all right. Thank you.
Let me just put it in. You're welcome. I guess I should stop using acronyms. Thank you. There you go, thanks. These are just these are a couple of examples. Okay, so basically the liability is just debt, and so basically there are amounts that your money that your or money that the company owes to others, right? Like for example, borrowed money from a bank, rent that you use for your building, because most of the time when you rent a building, you have like a 10-year right lease or something, so that's a liability. Money owed to suppliers, materials, payroll, taxes. All that is liability because you owe it their debt, right? And they're listed on your balance sheet in order that they're due. So you're gonna have this year's, which is current liability, anything due this year, and then you're gonna have long-term liability, which is not due for the next couple of years. So let's say on the example of, let's say you have a loan, and let's say your total loan is $10,000. So you would have it, and you're paying, let's say, $1,000 a month. So your current liability portion of that year will be like, let's say, I'm sorry, the 1,000 that you're paying every month for this. Let's say less, right? Let's say 100, because 10,000 will pay, say 50,000, right? You pay $1,000 a month, let's say 500 a month, right? So this year's current liability will be 500 times 12, and then the balance will be non-current liability. So you just put that portion, the portion that's due this year, under current liability, and the rest of the balance will be long-term liability. So you will see it broken up like that in your balance sheet. And does that make sense? Any questions? Okay, so like, let's say things like payroll, like if you pay have payroll and you pay, like, let's say every 2 weeks, once a week, you will be accruing it weekly, and once you pay it, then it will be off your liability. But you still be accruing it weekly. Like, let's say if you were to pay monthly, right, you accrue the payroll weekly, and once you pay it, it's an expense, no longer a liability.
So I have a question.
Sure.
I have a question. So when you say about like the long-term liability, let's just say like we borrow $50,000 from the bank, January 2025, but we don't start making payments, right? We have like
Yes.
maybe 5-year, like a 60-month, payment on it, right?
Right.
But wouldn't you see the $50,000 liability, like because you took the loan, like that?
Yeah.
that-
So you at the beginning of the year, right? You take the first 12 months, right, that you're gonna pay for 2025. You put it on current liabilities, and the
Mhm.
rest of the loan will go under long-term liability because it's not due till next year.
Right, but you still have to make the entry for it because you borrowed the 50,000, and then you just pay
Right.
it down with the
So-
accounts payable portion of it.
Right. So your original entry, right,
Yep.
would be like a debit against your cash, right? Because you're
Right.
receiving cash, and then you
Right.
will credit your
Loan.
current liability, right, and
Right.
long-term liability for this year's current liability, and the rest to long-term liability.
Okay.
And then the next year, and then once you pay every month, right, against that current liability, then it will be a credit to your cash,
Right.
right, and a debit to your current liability, right?
Right, because
And
it's
then your current liability, yeah, for this year will go to zero, and then next year you will take it once again from long-term liability and move it to short-term
Okay.
liability for the 12
just
months.
want to make sure that the entry is marked because that's when you're borrowing the money for
Right,
that
because
particular year.
right, because then you will see like the entry against the cash, like you will see the cash come in, and then you will have the liability also grow. So cash will
Right.
grow, and your liability will grow, and then once you pay it off, little by little, it will be like the
Yep.
opposite.
Okay, thank you.
You're welcome. Any other questions? Okay. Okay, so yeah.
Yeah, I do have one question. Well, maybe it'll go into the next section.
Okay, no, you can ask.
Well, because so I've been putting a lot of my personal income into building my business. How
Okay.
do I I mean, when I'm filing my personal income tax, am I able to claim what I've been putting in my into my business as deductions?
No, that's more like an investment than a deduction. So it'll be you're building up your equity. So it will kind of go into the business equity of it.
Okay. So
Right?
okay. All right.
So it'll be like on your balance sheet as business as owner's equity.
Okay. All right.
So like
All right.
when you it'll be like when you purchase things for the business, are you just putting money into the business like account, or are you buying things out of your personal account?
I'm
For the
I'm
business?
I'm using my personal money to, you know, pay for different things that I need in order to build the business, right? So, the business isn't making money right now, but
Right. Okay, I understand. Okay, so then in that case, if you could, um, but how come you don't have a like a business account? How do you transfer from your personal account to the business account?
no, with my money, I just go buy the things that I need for the business. Because I'm a startup.
Okay, so
So
what type of business is your business registered as a
um it's a service. I do makeup.
like it's on like LLC or like
Yeah. Oh yes, LLC. Yes.
oh, okay. So I mean you could expense it under your business, but the LLC is a pass-through entity, so you would report that on your personal income anyways, right? So you can, if you are buying stuff for your business, you could put your business expenses on your personal tax because
Okay.
you would just list that you're not making that much money, so you will report a loss.
Okay.
So that
Gotcha.
loss carries through to your personal because LLC is a pass-through entity, so you are reporting on your personal, right? On your personal
Gotcha.
on your
Okay.
personal when you file your taxes.
Okay. All right. Thank you.
You're welcome. So yes, so liabilities, in the order that they're due, you have it. So that at the very first account you see on liability is the next one payment that's due on for your business. Any other questions on liabilities or anything else? Okay. So and then so equity is, which is also called capital or net worth, is the money that would be left if your company sold all your assets and paid off all its liabilities. So this leftover money will belong to the shareholders or the owners of the company. So basically, that's why I say if your assets minus your liabilities is equal to your equity, that's how much. And there you would, it starts off with whatever money you invested in your company minus any income plus income, sorry, minus any expenses and debts and things like that, and then that'll be your shareholders equity. Just to show you an example of what this looks like. This is a sample balance sheet, right? So this company here has current assets, right? So this is things that will be turned to cash or already cash within this year, right? This is already cash. This is your checking account savings. Petty cash is accounts receivable, inventory, and prepaid insurance. When you prepay something, that's an asset because they owe you the insurance is already prepaid. And then non-current assets right here, right? Accumulated depreciation. It's just like this is negative because it's what is called a it goes against the asset. So it's a contra asset account. So it goes against the asset. And so that's why it's negative like that. So this is for the let's say probably this computer. So the total value of this computer will probably be this minus this, or probably both. And yes, hi, there's a hand. Hi, Patricia. Sure. What's your question?
Hello?
Hi.
No, I think there's an issue with my computer, so I was raising my hand. I couldn't. I was trying to say something earlier, but you weren't hearing me. It's okay.
Oh, okay. All right.
An issue. I'm sorry.
Okay, no problem. Okay, so then this will be the depreciation accumulated for this year, and every year this accumulates until the everything is completely depreciated minus land, which never depreciates. So this right here is your current assets. These are your non-current assets, and this is the total of both. This plus this should give you total assets. Then on the liability side, you have your current liabilities, your non-current liabilities. And then this is your total liabilities, which would be this plus this. And then you got your owner's equity, retained earnings. Retained earnings is just earnings that you keep in the business, right? That you didn't pay it out to the owner. So, and then that's your total equity. So this should balance out your liabilities plus your equity should equal your total assets. So that means that's what they mean when they say that it balances, right? That is in balance because your total liabilities plus your equity should equal your assets. So in other words, your assets minus your liabilities should be equal to your equity. All right, any questions on this? And of course, this is like your cash accounts right here. These balances should match your bank statement balances. Here's another example of your balance sheet. Basically the same thing. Any questions about balance sheet before we go on to the next statement? No? Okay. So the next statement that I wanted to talk about is your income statement, and it's also called profit and loss statement, but it's basically the same thing. This statement is, so like let's say the balance sheet, it gives you balances as of a certain date, specific date, like as of December 15th, these are all your balances, right? But the income statement shows you like over a period of time, like how much money you earned and how much money you spent over a period of time. So you can pull this for like the last month, the last year, last quarter, right? It measures your company's operation over a given amount of time. So it'll show you your income. Also shows your costs and expenses associated with earning this revenue. And the bottom line of the statement usually shows your company's net earnings for that period of time, or losses if it'll be in parentheses if you have losses. So this tells you how much the company earned or lost over this period of time. So what is this used for? A few things. So it's used to determine how profitable your company is, for investment value and for credit worthiness. It is used to evaluate your past performance of the company. Again, with the trends, it'll see how much income you've been making the past few years, how much you've been spending, how much expenses the company has, and then it also provides a basis for predicting future performances by seeing the trends, and helps to assess the risk of uncertainty on achieving future cash flows. Just by looking at that, any analyst will be able to tell you what they think, where they think your business is headed in the near future. So this is a little easier. This is just income and expenses, basically. So it looks like this, right? So you will start out, this is your company's name here. This is just a sample, and it'll say like income statement, and it says they created. There's a 3-year income statement, right? So year 1, year 2. So once, if you were pulling this up for your company, you will see last year here, 2024, 2023, and 2022. So you will see it like in that order. And this has here your total sales, less any discounts or returns. So then this is net sales, right? After returns and discounts, then over here, you're gonna have your cost of goods sold, which is what it costs you to make the product that you sold here, right? And it costs directly linked to production, or if you're just reselling, right? The cost of the resale. And this is operating expenses, or like general expenses, which is company expenses, but they're not directly linked to production, right? So like wages, advertising, repairs, travel, rents, things like that, etc. Right? So you have your list of expenses here. You have like depreciation, things like that, interest, like any miscellaneous expense that you might have. Okay, so over here you have other expenses, like other expenses or income that you might have that's not from the business. Like let's say the bank, you have a high account and you earn interest for your bank account, or you loan somebody money. So it's other income that doesn't come from your everyday sales, right? So interest income and other income, right? So you put that here, like let's say you gave a loan, you charge interest, anything like that, that's not from your everyday sales. And any tax expenses will be all the way at the bottom, like, so you will be taxed from this, and then you'll be your tax expenses here. And then what's left after your tax is right here is your net profit or loss. So this, if you have profit, it will show like this. And if you have loss, it will be in parentheses like this. So this is what's left after you start with this much and you pay all this, and this is what's left right here. This is pretty straightforward. So you have your income and you have all your list of expenses, and you have what's left here. And as you can see, this company, by looking at the trend, it's been making the same amount every year, right? 23,000, 23,000, 23,000. This is a good tool to see your expenses and see where you're spending money, and kind of budget and see where you can cut expenses. If you're making enough, if all your income is covering your expenses, if you have money right left over. If you see, let's say, also you can help you. There are things that jump out at you, like when you see something like this, right? Usually your monthly expenses are pretty much the same, right? Monthly, like your rent is the same every month. Certain things. So if by looking at this, you see like a jump in one of these accounts, you would know like, oh, something's wrong here. This is wrong. So it's a very good tool to use to track all your expenses and make sure that things are being categorized correctly, or that you're not missing money, anything like that, right? That's all. Any questions on your P&L? Yes, hi, Patricia. Did you have a question?
I'm sorry. It's an issue, I guess, with the muting and the unmuting. So I'm not really sure what's happening here. So I do have a question. So the income statement, I know that I worked with like different accounting programs, and so basically everything gets transposed onto an income statement. Like, in other words, like I use QuickBooks. So QuickBooks would provide me with the balance sheets, the profit and loss. However, my income statements, actually, I got them like from our accountants that we had to transpose the information over to. Because I don't remember seeing like a place in like my accounting software where I'm able to pull like an actual income statement itself.
Are you tracking your expenses in QuickBooks?
Yes.
So you should be able to pull up an income statement. So if you go to QuickBooks, at the top, there's on the categories of category that says reports, right?
Yes.
So you click on that, and they'll say like company and financial.
Yeah.
Click on that, and they'll say P&L.
Right.
That's your income statement.
Okay. No, only because this. So oh, I see. Because you did it like basically by the year, and then you just broke it out in columns.
Yes, you can break it up like that in QuickBooks also.
Okay. Yeah, that's why I was a little confused, because I usually just run the P&Ls, but I also know when I worked for another company, we have bonding, and the owners had to put their personal assets, and I had to fill out actually income statements, transposing like their personal information as well. So that's what I'm saying. Like, I don't remember seeing like in QuickBooks an actual income statement form. It was always through P&L. I just want to make sure
P&L, no, it's basically the same thing. It's just that it's called P&L in QuickBooks, but it's the same thing.
Okay, I just wanted to make sure. I was like, oh, where is this? Because I usually have to like transpose all the data to like a form that the bank sent me or something like that.
Yeah.
Okay.
So no,
All right.
you should be able to pull up your P&L for whatever.
Right, no, that I do. I'm able to do that without a doubt. It just when the income statement, like when my job I was working at,
Mhm.
when we dealt with like bonding companies, the owners like had assets and personal information that were not in the business
Okay.
portion of it. That's what you have mentioned, like the personal.
Right. Yeah, you have to like categorize that into like personal
Yep.
things. Yeah. I see what
Okay.
you're saying.
All right.
Okay.
I think there was something I was missing. Thank you.
Okay, you're welcome.
Mhm.
All right. So, any other questions in regards to the income statement?
Does that have anything with like if you did the personal net worth,
Mm-hmm.
or that's different?
Yeah.
Would you be able to calculate the personal net worth, or how do you calculate it?
So, the network of your company or your personal? Because you have the LLC, right? So basically, if you go to your, so
I have a sole proprietor, but I need to calculate the personal net worth. So yeah, my personal net worth.
okay. For the company, yeah, would be like, I guess, equal to your equity, right? Your equity in the company, right? So you have to put in like your equity in the company plus whatever other personal assets you have to make a net worth. So you would have your company's equity plus and your personal equities that you have, like if you own a house or whatever, to calculate your personal net worth, not like the company, right?
Okay, it's not separate.
Right?
So it's not separate.
I mean, but you want to calculate separate your personal net worth, right? Not the company's.
Right.
For the company, it'll be whatever your equity in the company, but it's a sole proprietorship. So you and the company basically, you have like a name for your company, or you just operate under your own name.
I have a DBA.
Okay, so yes, you can separate that and put like separate, separate books for your company and separate for your personal stuff. And just when you go file your taxes, you have to file like Schedule C or right with your personal taxes. So then that where you put all your for tax purposes, but for bookkeeping purposes, you can keep it separate.
Right. Okay.
Mm-hmm. Okay, so if there's no more questions about the income statement, then we'll go to your statement of cash flow. So this is very, very similar to your income statement. So it basically is this same report minus anything that's not cash, right? So like you would back out depreciation and things like that. So you will only measure things that are cash. So basically it's called cash flow because it measures cash that flows in and out of your business. So it's basically like your register, right? So the cash flow shows you the exchange of money between a company outside the world. So instead of showing you a list like this, right, total income and whatever, you will see how much that your cash balance at the beginning of your year, and then you will see activity in between, and then it will show your balance at the end of the year. So say you started your year with X amount of cash, you used cash here, you got cash here, and then at the end you'll see your balance at the end, and that balance should match your bank account balance and your balance sheet cash balance here. Okay, so the cash flow shows you exchange of money between a company and the outside world over a period of time. So it shows changes over time rather than the absolute dollars amounts at a point of time. It uses and reorders the information from your company's balance sheet and income statement. So the bottom line of your cash flow statement, it shows your net increase or decrease in cash for the period. So no, this statement is divided into three separate parts. Okay, each part reviews the cash flow from active activities, these three types of activities. So you're gonna see the statement, and you're gonna see cash activities in three different categories. So your number one is operating activity. So this shows your cash flow from your normal everyday activity. That's operating activities, right? So, and number two, investing activities is cash flow. This is where you see your investment in the company, any investment, if you purchase equipment or whatever, so that's you investing money in your company. That's the cash from or used in investing activities. And then financing activities is, so investing is you investing company, and financing is other people investing. So like if you go out and get a loan, that's a financing activity. If you were to sell stock, that's a financing, because the money is coming from outside, it's not coming from you. So that would be cash flows from financing activities. So why is this statement important? So your company needs to have enough cash on hand to pay its expenses, to purchase assets, right? In case anything breaks, things like that. So since your income statement can tell you whether your company made a profit, but the cash flow shows if you generated cash. So that's the main difference between your income statement and because your company can show on paper like it's making profit, but like your actual cash flow could be more or less, right? Because if you sell something on credit, let's say, for example, you have income, right? But it's on credit. Like if you're offering credit to your customers, you didn't actually get that cash yet, right? So that's a difference between your cash flow. So you would when you run your cash statement, you'll back out that sale because that you didn't actually generate cash. If that makes sense, or like your depreciation, amortization, things like that, you would back that out because that expense was not a cash expense, so you would not have that on your cash flow. So this just show the flow of cash, basically. Would what be accrued?
If you sold somebody something, like basically, and you didn't get paid for it yet, would that be considered like an accruement?
No, that's accounts receivable. So it'll be accounts receivable.
They owe you. Mm-hmm.
No, I understand that, but okay, never mind. I was thinking about something else. Never mind. Okay, never mind.
Okay.
Never mind. I was thinking of something else. X that.
Okay. No. So I'm just going to show you what this is called the direct method, right? Of cash flow. There's two methods, and this is like the harder one. So because you have to keep really, really good tabs. So you're gonna see all your cash that received, and you have to keep tabs all the money that came in and out. Most companies don't use this because you have to be on top of all the money that comes in and out and receiving receipts and things like that. The most common one is this indirect method, where you take your cash flow and you back out anything, you take your bank statement, your income statement, and you back out anything that's not cash. So like, let's say in this company right here, right? They started, this will be like your operating cash flow and then it shows you 4 years. This has 5 years here, sorry. So 2014, they started the year with, right? This is your, I started out with nothing, right? And then their closing cash value was 167,000. So over here, right, that you have your net earnings from your income statement, right, which will be down here, net earnings, right? Then, then you're going to add depreciation because it was not a cash expense, and then you're gonna any changes in working capital. So now this is your actual cash that came in, right? And then here from operating activity. So this is the amount of cash that came in from your operating activity. So is your net income minus any non-cash sales and adding back any non-cash expenses. So the way you add back, reason you add back the expenses because on your income statement, you have, if you've sold $1,000 and you have $100 depreciation, then your net income is $900, but in reality you've got $1,000 in cash, so you will add that back.
Mhm.
And then that will be your total cash flows from investment activity. Now here, cash flow from investment in property, that's not, this is you investing in your company, right? They invested $15,000, right? And so this is for property and equipment, right? So, and so this is positive. So I'm guessing they sold property and equipment, right? So now this is financing cash flow right here. They repaid it of equity right here. They use money, right? So here they use money. So now your net increase was 167,000. And this is your closing cash balance. And then next year, your opening cash balance is this. You can see it right here. And then over here, you'll see all the activity. And then you'll see your closing cash balance, which will be your opening cash balance for next year. So it basically shows you your cash balances or your cash activity throughout the year, your beginning balance, and then your ending balance for the year. Okay, and then this balance right here should match the total cash you have on your balance sheet at the end of the year here. So that's how I know it matches. So see how it reuses the information. So this is basically your cash account here, and it also uses the your net increase, right? From which is your net earnings here from income statement. But see, they're separate reports, but they all tie into each other. Any questions on this statement? Does that make sense? I know it's like a little convoluted, like a little confusing in this. But it's basically just cash flowing in and out of your business.
Mhm.
And I just want, so I'm gonna go over each of these categories a little bit more, right? For the cash flow. So with the operating activities for most companies, this section of the cash flow reconciles your net income, like we said, as shown on your income statement, to the actual cash the company receives from or use in its operating activities. So to do this, it adjusts your net income for any non-cash items, such as adding back depreciation expenses, and adjusts for any cash that was used or provided by operating assets and liabilities. Okay, so this is this portion right here. Okay, and then the investing activity shows the cash flow from all investing activities, which generally include purchases or sales of long-term assets, such as property, plant, equipment, as well as investing securities. If your company buys a piece of machinery, the cash flow statement will reflect this activity as a cash outflow from investing activities because it was used. If the company decides to sell off some investment from an investment portfolio, then the proceeds from the sales will show up as a cash inflow from your investment activities because it provided cash. Okay? So this would be your investing activities. Then for financing activity, which is the third category, this third part of cash flow statement shows your cash flow from all financing activities. Typical sources of cash flows include cash raised by selling stocks, bonds, or borrowing from banks. Like I said, this is from outside sources. So likewise, paying back a bank loan will show up as a use of cash flow. So it'll be an outflow of cash from your company to the bank. So it'll be cash flowing in and out from your company to the bank. So your ending cash flow and your cash flow should equal the reported balance on your balance sheet. So if this is 2024, your ending cash balance on your cash flow should match the cash balance on your bank account for 2024 on your balance sheet. Okay, any other questions on cash flows? So if any of you guys that have any questions, like if you go home and that you guys have and you're not sure about some statements or whatever, you could, email me. I'll provide my email later and ask me anything, like, from your own personal financial statements. Okay. So key takeaways that I want from you guys here is that financial statements are written records that convey your business activity and the financial performance of your company. Your balance sheet provides an overview of your assets, your liabilities, and your stockholders' equity as a snapshot in time, so it's on a specific time. Your income statement basically focuses on a company's revenues and expenses. So basically how much money you made, how much money you spent over a particular period. And once expenses are subtracted from revenues, your statement produces your company's profit figure called your net income. And then the cash flow measures how well your company generates cash. So to pay its debt obligation, fund its operating expenses, and fund investments. Okay. So I just want to leave the rest of the time for any questions or anything else that you guys might be confused about, or if you want me to have any questions about anything else accounting related. It doesn't have to be this right here.
So is it possible to get this slide after the class?
Yeah, I'll send it to Jay. And
Okay, all right, thank you.
so you can these are resources that I use.
Mhm.
This is very good. This is from the SEC.
Who's Jay?
Mhm.
Who's Jay? How are we going to get this from Jay? Who's Jay?
From he's the host. Okay, so if you look at the SEC, it'll tell you the basics of financial statements. Okay, on their website. I just want to. This is a very good source for you guys to look at. Okay, so it says Your Beginner's Guide to Financial Statements. I would say read this, it's very good. And oh, yeah, I'll give you my email in case you guys have any further questions, or you want to reach out to me for any reason. And if you do want a copy of the slide, just email me, and I can also forward it to you.
Yeah, I want a copy too. All right,
Okay,
so email you.
Yeah, just shoot me an email. And I can
Thank you so much.
Oh,
Thank you for this class. I appreciate it.
Yeah, I know it's like sometimes it's hard to think of questions on the spot, especially because you're getting all this information at the same time. But if anything else pops up, any questions like after, you can email me anytime. I'll answer my emails, right? Any question that comes up or any questions that are specific to your business, you can email me too.
Thank you kindly. I appreciate it.
You're very welcome. I hope that this class helped to give you like a little bit of an understanding of what I want you guys to like kind of just take a look at like what I want you guys to do is like when you're accountant prepares your financial statements, I want you to look at it and be able to know what you're looking at and not just be like, oh, okay. Like you're like, okay, so accountant knows what he's looking at, that's it, but it's your business. So I want you guys to know what you're looking at and understand it, right? Don't just let the accountant handle it. Like of course that's his job, but you also should be on top of your business, what's going on with your business, because it is your business, right? The accountant has how many clients, right? But that's your business. That's like your baby, right? So you want to know always what's going on with your business and ask all the questions you have. I know like people don't like asking questions or if they feel like they're badgering the accountant, but that's literally what they're there for. They work for you. So ask all the questions. If you don't understand something, sit there and you ask, and that's they should be able to explain to you things in a way that you can understand it.
Just a kind of like a side question. I saw that this was streaming live on Facebook. It said, is that like also an area of saved, like a review of this video? Is that someplace we can
Yeah,
click?
the EAC has a YouTube page, and it has a lot of the classes there in previous webinars that I think should be there too.
Okay, and what's the name of the page again?
Let me see if I
Sorry.
can. Do you have the link, Jay, to the YouTube?
I will send it right now. Just give me 1 second.
Okay, very bad.
Thank you, Jay. Woohoo.
So it's kind of like out of topic, right? So, from the first week of March, like there's gonna be a 60-hour training program going on, right?
Yes. Mhm.
So, like I was kind of like curious, like if you could provide how the course is gonna be, because it's a 60-hour thing, and if we could know how that course gonna be, then that would be really helpful, you know.
Okay,
So,
so the course, basically, the main object of the course is to have that by the end of the course, you walk out with your business plan for people who don't have their business plan.
mhm.
And it teaches you, it's a lot that's covered in that class. So I would say, make sure you come every day. They're going to give you an outline of the class on the first day. So you're going to know exactly what you're going to be learning. If you can, try to read ahead. It will help you on the book. And try to do your homework, because that's going to help you a lot. Because the homework, when you're doing your homework, you're basically writing your business plan at the same time. So all the information from the homework is going to be used in the business plan. So once you do your homework, your business plan is halfway done. I feel like a lot of people don't do their homework, and then like at the end of the class, they're like struggling to finish their business plan. So that helps a lot. But he covers a lot of finance, marketing. They speak a lot about there's like a whole list, like there's a lot. Each class is a separate. He has people that he invites to talk about certain things. So it changes a little between classes, but yeah, it's a really, really good class. If you have not taken it, I would recommend taking it.
Okay, all right, thank you.
Yeah. Oh, Patricia, you finished the class?
I finished it with Santos in December.
Santos is great.
Yeah,
Yes.
well, actually, we had to do like a makeup class in January because I guess, with the few times, things happening with the hurricane in Florida and stuff like that. So, but it was a very good class, very good.
Yes, yes, yes.
I
So
did
this
the one
class
with
is
Edgar
like,
Hernandez. He's just as good, and I can't wait. Are you guys gonna go to the meet?
I'll be there. I'll be at the meet. So hopefully
Yay,
I'll see
me
you guys
too.
there.
Oh, I thought
on
they
March
canceled
5th,
that.
right? On March 5th, you mean?
I thought they canceled that.
I didn't see a cancellation.
No.
I thought I saw on the classroom that it was canceled.
No, they canceled. So I was supposed to teach a Spanish class, and that one was canceled.
Oh, okay. I guess it's like one thing after another, like the comments, you know what I'm saying? So, okay.
So the class in Spanish was canceled,
Oh,
but I think the March 5th, as far as I know, is still on.
I think that's Ash Wednesday.
Oh, is it?
Yeah, I think it's a Wednesday.
What class is that on March 5th?
It's not a class. It's a networking.
Mhm.
We're all gonna
Okay.
get to network with each other.
Oh, okay, I didn't get that information. Where
From
do I
6 to
find
8.
it?
It was emailed to us. Well, it was a survey actually.
Yeah, I think it's for people who have taken the class previously. So
Yeah.
Yeah, I took the class with Santos too.
Oh,
From the summer until I think we finished September, something like that.
have you been getting emails from the center since you took the class?
Not lately. I haven't gotten anything because remember there was supposed to have been a graduation. Whatever happened to that?
Yes, I'm not even sure.
Oh, okay. So I missed that one. Oh, okay, yeah.
Oh, so I would just reach out to if you have the Santos's email, or actually Jen, if you have Jen's email,
Yeah,
and let her know that you're interested in attending the networking event. So that when you took your class and your name,
mm-hmm. Yeah,
then
I got
she'll
one.
be able to send you the details of it.
Okay.
All right, so we can get the copy of tonight's information. Jay's gonna put it somewhere for us.
Or you can email me. I put my email there.
Okay,
So anybody
perfect.
who wants, just email me and I'll send it.
Okay, I'm gonna do that now. It's gonna come from my Miracle Cafe.
Mhm.
Thank. Okay.
Okay.
Thank
And
you.
I'll be calling you because I really need help to make sure I do these forms right and understand them.
Okay. Yeah. Of course.
Okay. All right, thanks.
Yes. Okay. Thank you, everybody.
Good night,
So.
everybody. Have a good
Thank
one.
you for coming.
You
Thank you for
too.
Thank you.
attending. I really hope